There's a lot of hype in the personal finance space when it comes to high credit limits, especially when it comes to funding a brand new business or an existing business. I have nearly $100,000 in personal credit limits and over $100,000 in business credit limits. And I actually accomplished that from my W-2 job and gig work that I've done over the years. I want to explain to you how those mechanisms affected my ability to have such success with financial institutions like American Express and helping me to get high limits without having to verify my income or provide any documentation so far. So let's start off by discussing what high credit limits are. Obviously, this is going to vary per person. In my personal perspective, $10,000 is a great foundational limit to have on any single credit card. There's a lot that you can cover emergency-wise and opportunity-wise with $10,000, but anything over $15,000 should be deemed as a high credit limit. That is a good example of financial institutions leaning in and saying that they trust you with a really reasonable amount of money. You have to remember, credit cards are unsecured. Someone's giving you $15,000 in purchasing power every single month or more is pretty significant. That having been said, when you start to graduate to the point where you have 20,000 plus limits, now you're in a pretty monstrous range. There's not a lot you can't do with $20,000 in credit cards, especially when you have more than one. How have I been able to accomplish this on the personal side? And at this point, well over $100,000 in combined limits on the business side. How did my W-2 job, my corporate job, and any gig work that I've been doing contribute to that success? Financial institutions are looking for opportunities to trust you. You are always an asset as a borrower and you are a liability as a depositor. I'm gonna say that again. You are an asset as a borrower. You are a liability as a depositor. They're always looking for opportunities to lend you money, and that's predicated on trust. Credit cards are one of those few products in the financial marketplace where there's very little verification really high up the ladder. You can get very significant limits without having to provide any documentation if your information is congruent, if the numbers line up and the rest of your data supports it. One of those big data points that they're leaning on when they're doing underwriting for credit cards is going to be income. In many cases, you don't have to provide income documentation for credit cards. This is a beautiful gift to underwriting because it simplifies the process. It allows the lender to lend out way more capital, and it allows consumers and borrowers like ourselves to get access to more capital with less red tape in the way. When you think about having a stable W-2 job and even consistent gig work, these are phenomenal income opportunities that banks can look at and see on a residual basis and start to build confidence and comfort and trust in you that your income is stable and solid. It's probably the top two major underwriting components to any lending product, especially when we're talking about credit cards, is your credit score and profile. We'll make that one. And then your income. Literally, your income can compensate for your credit profile and your credit score. If you don't have the strongest credit score or the strongest credit profile, whether it's thin or partly damaged, having a strong income and as well as coupled with a good DTI can compensate for that, getting you access to a credit card and decent limits on that credit card. My corporate job, as well as my gig work, has allowed me to spread out direct deposits over several institutions. Each of those institutions has lent me a significant amount of money without asking me for a lick of documentation. And I wanted to give you context on that because many of you are not exercising the power that your W-2 job and your direct deposit can bring. When you stop and think about it, your direct deposit is income verification. It's literally the same thing as you providing W-2s or pay stubs or bank statements. When that money's coming in on a frequent basis, that institution is looking in at that money coming in live in real time. This gives them the comfort that they need to start lending you higher credit limits. This is what a foundation to the underwriting that's going to get you high limits on credit cards on the business side. This is where that comes into play. You want to have the underlying underwriting tactics in place. You want to have those data points in place to demonstrate to banks that you're a stable borrower and you're a great business partner to work with. Having a strong direct deposit from your W-2 job is the most attractive income in the marketplace. Lenders love W-2s and they don't mind gig work if it's coming in as a direct deposit. It's also attractive. This also has a bonus feature. It gives you budgeting capacity. When you have direct deposits come in, especially if you're able to split it up over different institutions, like I did over the last handful of years for myself, I have a primary bank where my corporate W-2 income goes into, my big money goes into, that helps pays for my lifestyle. And I have gig work and side business work that is going into other institutions, including American Express, over the years. And this is going to allow you to budget your money more effectively. Banks will also be able to tell if this income is your primary income, and they'll also be able to tell if this is just your excess income. So don't be nervous to do a $50, $100, or $150 direct deposit to an institution thinking it's too small. Trust me, it matters. They're able to look over your entire banking relationship and transaction history and tell that that's just excess income because your rent might not be coming out of there. Your maid major groceries, your electrical bill, etc., your major life expenses might not be coming out of that account because that's not what that primary income is in the first place. They're able to tell when this is just your excess spending account. That's a plus to them because that means that you, number one, have excess income in the first place. The second thing it demonstrates is that you have a major banking relationship somewhere else, and that gives them something to work for. Banks are constantly competing for your business, and when they can see this excess income going into the accounts that they're holding versus your major income going somewhere else, they start to give you those credit limits that are comparable to what other banks are giving you, and they're starting to compete for that business. This is how you start to get 15,000, 20,000 limits across several different institutions, and this is what lays the foundation if you ever decide to become a solopreneur or start or grow a small business. This is what's going to give you access to no-doc, high-limit funding on the business side. Please use and leverage the benefits of your W-2. It's worked tremendously for me, as well as my gig work. That is how I set my banking relationships up. I have multiple different income streams, even if they're small, going into various institutions that I'm looking to grow with. It's worked like a charm. Not to mention, when you do your credit card applications with American Express, guess what tool you might have in the backdrop from your employer that you can exercise on your credit application to get you higher credit limits? Your 401k. American Express, as well as other institutions, may ask you what assets you have, not just your income. They're giving you an opportunity to show more financial prudence, responsibility, and they're giving you even more underwriting space or breathing room to qualify for that credit card. If you don't have the highest income in the world or you don't have the best credit in the world, they're giving you the opportunity to put down assets you may have on the books. Your 401k is one of those assets. You have a 30, 40, 50, $100,000 401k. You can put that down on the application and increase your approval odds and your credit limits. So I wanted to give you context what has worked for me over the years so you can exercise those same tools. You don't have to have a monster income as much as you want to have a stable income and a decent spread from your expenses. And if you have a side income, tantalize these banks and institutions with this excess income so they'll know that you have strong income coming in and you have consistent income coming in, so they'll feel more comfortable approving you and approving you for higher limits. So I just want to give you context on the success I've had. I want you to comment down below and let me know how you're structuring your income with the different institutions that you're working with. And I also want you to comment down below and let me know what institutions you're planning to use this strategy with and how you're planning on using that money once you get your hands on it. To all my pioneers, welcome back. To my new viewers, welcome in. I want each of you to stay focused, stay in motion. I'll see y'all soon.